Hello traders, today we want to discuss a Forex trader begins a complex wave counts analyzing the US dollar South African rand. Forex trader begins a complex wave count analyzing US dollar South African rand. All right. The USDZAR, all right? So it is a bit complex wave count, and I would like to invite traders to pay attention, all right? And most importantly, to watch the full length of this tutorial. I recommend to traders to pay attention carefully to what we are about to do here. If you want to learn, all right, to master complex wave count, all right? So one of the tips that I gave traders before is that when Elliott will become complex, we can go to the yearly chart, try to see whether we can find, okay, the waves. So looking at this chart, I don't want to remove my lines, by the way. You can see that it's just a straight line from here, from 2011 up here, followed by this spinning top, all right? Okay. So I couldn't, on this yearly chart, I can't say what is the second wave, what is the third Elliott wave. For those reasons, if we cannot see on one time frame, we drop it down to another next time frame. So on the quarterly chart, it looks to me that the price went up from here to here and then pulled back a bit and then start going up like this. But you can see that as it pulled back here, that's what I can say on the quarterly chart. As it pulled back here, it just continued to go up all the way up here. So the question is all this the third Elliott wave? All right. One more tip that I can give to traders is that whenever you are labeling a wave as a third Elliott wave, do not label, okay, any price action with this type of candlestick bar at the top. So I will never label the third Elliott wave like from here all the way up here because of this candlestick bar here, this spinning top or inverted hammer is alerting me personally. I never call anything like this third Elliott wave because of this. The third Elliott wave that is extended, if you call this the third Elliott wave, you are saying that the third Elliott wave is extended because it went above the 161.8% Fibonacci extension level of the first wave. Therefore, a third Elliott wave that is extended cannot end with a bearish candlestick bar. So this is one thing you need to be aware of. You see here, this candlestick bar, inverted hammer. We cannot call this the third Elliott wave because it's a bearish candlestick bar. A reverse bearish candlestick bar cannot be at the top of a bullish extended third Elliott wave. Does it make sense? All right. Traders say I'm repeating myself so much, but what I'm trying to do is to clarify it so everybody can understand it. It's like you explain something, some people understand it quickly, and other people do not understand. So you want to go over it a bit more. So do not call anything like this. Never call this. This is not the third Elliott wave up to this point because of this. Okay, inverted hammer here, a bearish inverted hammer here. So our third Elliott wave probably has ended somewhere here, somewhere in this zone. But one more thing on this quarterly chart, because what I said also before is that when we have something that is confusing, something that is complex, all right, if there is a chaotic situation, we want to break things down bit by bit, okay? So we want to look at each piece, okay, one by one, to analyze it one by one. We want to break it down. We want to look for a stable data. We want to look for a truth. All right, this is what we are looking for. So on this quarterly chart, I can see that price went up from here and then pulled back here and then went straight up here. This bearish candlestick bar is alerting me that this cannot be the top of the third Elliott wave, which is good. But another thing, okay, is that we see that on this quarterly chart, the price came down in straight line like this on the quarterly chart. See here? quarterly chart, it pulled back like this. But we know that with this bearish candlestick bar over here, this cannot be the top of the third area wave. So therefore, this move down cannot be the fourth area wave. So it looks to me that this move down is a part of the correction. It's part of a corrective wave. Is it making sense? All right, let's move on. Okay. So now, so we have a few information, we have more information as we look on the quarterly chart. Let's drop it down again to the monthly chart. On the monthly chart, it was clear that it went up and then it pulled back and then it went straight line. Again, here again, same thing we see on the quarterly chart. It just went straight line up here. But we know that from the quarterly chart, this cannot be the top of the third area wave. So probably our third area wave has ended somewhere before this top here. But something is now clear on the monthly chart is that the price, this move down that we look at on the quarterly chart, that was a straight move down on the quarterly chart. Now we can see the internal wave. 1, 2, 3. All right. So price went down straight line, went up, and pulled back down like this. So some people may say this move up is another wave. It's not. You can see that it's surrounded by two bearish candlestick bar, horizontal. It's a kind of consolidation. Yes, price went down. You see, this one is a move up because it's corrected by two candlestick bar, 1, 2. But this one, this move up, so you can see price went down. There was this bounce up, one candlestick bar, quickly retrace it. This one up was corrected with two candlestick bars, so this is a wave. But this one is not. Really? Feel free to disagree. All right. Feel free to disagree. All right. So it's 1, 2, 3. All right. That's fine. Now, something is now clear to us that the price went down 1, 2, 3 on the monthly chart. All right. But on the quarterly chart, it was not very clear. So we are trying to put the puzzle together, getting the piece by piece. All right. Try to filter out. All right. The wrong indications, so we may get the right information. So we may interpret the language of the price correctly. So we may identify, okay, each wave correctly. All right. Now we're going to because normally on the monthly chart we can see all the waves very often, but now we can see it's not very clear very much. We can see what is the second wave that we can say, okay, probably this is the first wave, this is the second wave. Where is the third wave ending? All right. All we know is that there is a correction here, and this is not the top of the third area wave. That's what we know so far. So, but we want to find out where is the end of the third area wave, where is the end, okay, of the fourth wave. All right, so we go now to the weekly chart. So you remember we started from the yearly chart. We try to put the puzzle, every piece together, all right, because we want to count the waves so we can forecast what is likely to take place for the US dollar, South Africa rand, all right. So we also know that from 2008, in fact 2009 up to 2013, the Federal Reserve was busy devaluing the dollar, which we can see here the price was going down. This is the reflection of that monetary policy by the US Federal Reserve. The price was going down here, okay? All right. And then they start changing their policy, okay, by the beginning of 2012 up to 2013. They were warning the market that they will end the quantitative easing, all right? So it is normal that this may be. So we are now on the weekly chart, look a little bit deeper. So what we are calling the first wave is making more sense here because I want to go a little bit faster now. You can see that I'm going to start from the tail of this candle, all right? I'll do that for the first wave. All right. So that first wave is subdivided into 5 minor waves on the weekly chart. I have done my homework without any area wave violation. 4, and 5. So this is the first area wave. Has been subdivided into 5 waves, and this fourth wave is now overlapping the top of the first wave. So because I put a lot of trust me on this one, or you can check it on your chart and let me know in the comment section. It's not overlapping it, okay? It's not overlapping it. And the third Elliott wave is not the shortest wave because it's longer than the fifth minor wave of the first wave. So this is definitely the first Elliott wave. Coming to somewhere near the end of 2011, the Federal Reserve start warning the market that they may not print the dollar as much as they did in the past. So here we are, first Elliott wave subdivided into 5 minor wave, and this is the second wave. You can see I put my vertical line. So first vertical line at the end of the first wave, second vertical line at the end of the second wave. All right. So then we have, okay, now there's a price action here. You can see, I don't want to dwell on it because we can go a little bit deeper, go to every details. But what I found is that this is the first minor wave of the third Elliott wave, which has been subdivided into 5 minor wave, 1, 2, 3, 4, 5. That's the first minor wave of the third Elliott wave. That's the second minor wave of the third Elliott wave. And then we have 1, 2, 3, 4, 5. That's the third minor wave of the third wave. No Elliott wave violation because that's the third minor wave of the third wave. Is not the shortest wave. All right. And then we have again the fourth minor wave of the third wave, followed by the fifth minor wave of the third wave. 1, 2, 3, 4, 5. I'm here now. So the fifth minor wave of the third wave. So in fact, our third Elliott wave is from here all the way up here. We want to wrap this one up very fast, okay? So here we are. So first waves have been subdivided into 5 minor wave. Second wave, followed by the third wave that has been extended. So our third Elliott wave has 5 minor wave, and the first minor wave is also subdivided into 5 minor wave. So this is the first minor wave of the third wave from here to here. Okay, feel like we can. So from here to here, that's the first minor wave of the third wave. That's the second minor wave of the third wave. And this is the third minor wave of the third wave. And this is the fourth minor wave of the third wave. And here it is 1, 2, 3, 4, 5. That's the fifth minor wave of the third wave. So our third Elliott wave is subdivided into 5 minor wave. The first minor wave of the third wave is also subdivided into 5 minor wave. The third minor wave of the third wave is also subdivided into 5 minor wave. And the fifth minor wave of the third wave is also subdivided into 5 minor wave. We are dealing here with a very, very complex wave count, where even the minor wave, the impulse minor wave of the third wave are complex minor waves. All right. So now we are putting the puzzle together, talking about complex wave count when the Elliott wave count is a little bit complex, and traders are wondering where is the first wave, where is the second wave, where is the third Elliott wave. We will drop down. So if you cannot see on the yearly chart, you go to the monthly chart, but on each time frame, what you can see, what is visible, what is clear, all right? What is making sense, highlight it, and then drop to the next time frame. And then again, look at the chart. What is clear? Can you see the first wave? Can you see a move? Can you see a price structure? Can you recognize an impulse wave? An impulse wave will be subdivided into 5 waves. Now, if you get information, drop it down again. So now for the yearly chart, quarterly chart. Okay. Now you go to the monthly chart. You look at it again, the price structure. Where are the impulse wave? The impulse wave will be subdivided into 5. All right. Remember that the third Elliott wave will never end with a bearish candlestick bar at the top, especially like you see on the quarterly chart, the inverted hammer. Those kind of filter will help you to identify each wave carefully. All right. Okay, we are talking about a Forex trader begin a complex wave count analyzing US dollar, South Africa round. So one more time, from here to here, that's the first minor wave of the third wave. From here down to this point, that's the second minor wave of the third wave. And from here to here, that's the third minor wave of the third wave itself. And from here to here, that's the fifth minor wave of the third wave. So from here all the way up here, this is our third Elliott wave. Now you have to understand that that candlestick bar on the quarterly chart has been very useful for us. Otherwise, we will be calling all this the third Elliott wave. That inverted hammer here was very, very useful for us to know straight away that this is not the top of the third Elliott wave, using a candlestick bar to filter out the end of the third Elliott wave. Very, very powerful. All right. So we know now what is the third Elliott wave. So it's becoming clear now. First wave subdivided into 5 waves. Second wave. Now third Elliott wave. Very complex third Elliott wave. Now this is our tiny. So now we have here the real fourth Elliott wave. Look at that. Because you can see that the third Elliott wave has been extended too long. So if the third Elliott wave is extended for too long, you are likely to have a very tiny fourth Elliott wave. Look, from 2012 up to 2015 for 3 years, and it has been a very extended, third Elliott wave, followed by the fourth Elliott wave. This is the fourth Elliott wave between those two vertical. This is our fourth Elliott wave. Feel free to disagree. All right? Followed by the fifth Elliott wave, that is also a complex fifth Elliott wave. 1, 2, 3, 4, 5. So this is our fifth Elliott wave right there. All right? That's it. That's our fifth Elliott wave there. So we have now put together all the puzzle regarding this complex wave count. All right. Now we see now our 1, 2, 3. So we were now expecting a flat correction to take place for the US dollar South Africa round. So at this stage, what can we say to traders? We say to traders, hold on please. We say to traders, priority to bullish signal above 13510. That's the level right here, 13510, priority bullish signal above that level. So we want it to pull back near that level and then use a top-down trading method. Now this video is more for advanced traders, not for gamblers, not for speculators, traders who know how to control their risk and use a multiple time frame trading method after identifying a valid trading setup. All right. So at this stage, priority bullish signal above 13510 and priority bearish signal below it using a top-down trading method. Okay. Now, the next thing that we can forecast, so we will now use the Elliott wave to forecast what is likely to take place for the US dollar, South African rand, currency pair. At this stage, we know that the flat correction will be formed of 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So our expectation is that when we give priority bullish signal above 13510, the price likely to form, 3 move up, 1, 2, 3. Sometimes you may not do 1, 2, 3, you will just go in a straight line and you cannot see the internal wave. Be aware of that. But we know that a flat correction is brewing. So minimum target, if we buy here for the flat correction, classic flat correction may end right here in a zone of prior high at 169. I'll put a line there. Zone. I'm talking about zone, not price level. So you see that now I'm using a different level now. Call it a 17018. 17018. Okay. So 1, 2, 3 into that zone. 17018. That's our expectation. In the case of this is about a classic flat correction. In the case of the expanded flat correction, we will expect the price to go above the high of the fifth wave. The high of the fifth wave is right here. So we'll expect it to go to which level? 138.2%. That zone. Zone. Not price level. Alright. So they say, Joe, why do you say all the time zone? It's a zone. It's because the price does not stop E like this. Alright. Okay. So we want to highlight the 138.2% zone. All right? Here it is. In the zone of 195.34, in the case of the expanded flag correction, the US dollar South African rand can continue to go up above 17018 and push it to 19534. How long before this will take place? We will see. We will see. We're just flowing with the price. We are expecting something. We don't rush. We are taking it one step at a time. All right? Trading like a pro, flowing with the price. Okay? A setup, trading signal, entry. All right? Setup, trading signal, entry on the edge. We know there's a high chance, high probability that the price may go up 1, 2, 3, reaching a level of 17018. In the case of the expanded flag correction, can even go up to 19534, which is the 138.2% Fibonacci extension level of the fifth wave. All right. Now, by the way, this video will be posted at 2-4 Forex Trader YouTube channel. But if you want to learn to master the Elliott Wave principle, feel free to subscribe to 2-4 Elliott Waves YouTube channel. 2-4 digit 2 digit 4 Elliott Waves YouTube channel. However, when I'm recording the videos about Forex trading, currency pair, and when I'm applying the Elliott Wave theory to Forex trading, that video will be posted at 2-4 Forex Trader YouTube channel. So I recommend to Forex Elliott Wave Trader to subscribe to both 2-4 Elliott Wave YouTube channel and also to 2-4 Forex Trader YouTube channel. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell the US dollar South African rand. So if the price reaches one of those forecast level, 17018 or 19594, there is a high chance that it will come down in 5 ways. All right, come down 5 ways. 1, 2, 3. So because I'm a bit under time pressure, the price will come down 1, 2, 3, 4, 5 down. This is a corrective wave, the C part of the flat correction, either a classic flat correction or an expanded flat correction or a running flat correction. All right. So there are video already posted at 2-4 Elliott Wave YouTube channel about the flat correction, and also there is a web page at 24elliottwave.com about the flat correction. 1, 2, 3, 4, 5. We can forecast where the C part, the C wave of the flat correction is likely to end. So the minimum target that I always say to traders for the end of the C part of the flat correction, minimum end is near the low of the A part of the flat correction. So this is from here down to this point. That's the A part of the flat correction. So the minimum target for the C part of the flat correction will be in the zone of 13510. So that C part can end here, which in the primary candle 1, 2, 3, 4, 5, and stop at 13510. There is another target, 2 more targets in fact, by applying Fibonacci extension to the A part of the flat correction. We will highlight the 138.2% level and the 161.8% level, the 138.2% Fibonacci extension level of the A part of the flat correction, and also the 161.8% Fibonacci extension level of the A part of the flat correction. So the C part of the flat correction can end minimum at the low of the A part of the flat correction in the zone of 13510, but also can continue to go down all the way to the 138.2% or 161.8% Fibonacci extension level of the A part of the flat correction. The 138.2% extension is at a 11774. The 161.8% extension is at a 10782. So the key level that we must remember are 19534, 17018, 13510, 11774, 10782. We want to trade around key level, make it excellent decision. Our expectation that this US dollar, South African rand currency pair will go up 1, 2, 3. Sometimes can go in a straight line to this level of 17018 or even up to 19534. And then you will count down 1, 2, 3, 4, 5. Minimum target 13510, 11774 or 10782. Remember that though in normal condition, in a healthy market, we will have an orderly market. If we have an orderly market, you clearly see it coming down 1, 2, 3, 4, 5. Sometimes, this is about the reality of trading, they probably just come down 2 in one move to reach one of those price targets. So, to summarize this video, if somebody is trading or investing in the US dollar, South African rand, or playing with the exchange rate between the US dollar and the South African rand, what we can say that in the medium term, the US dollar has a high chance to appreciate against the South African rand, which means the South African rand will be weakening against the US dollar in the medium term. All right? So what do I mean? Which means when we are expecting the B part of the flat correction, either a classic flat correction or an expanded flat correction, the US dollar has a high chance to appreciate, to strengthen against the South African rand in the medium term. This is our expectation. All right? So do not use the expectation like a guarantee or magic one. I need to mention it because there are people out there watching videos and making decisions. You have to be responsible for your own decision. The timing of the market, that's the most important thing. All right. So for a medium term, this is our expectation. All right. After the medium term, there's a high chance that the dollar will start weakening against the South African rand. So when the B part of the flat correction is completed, and the C part of the flat correction is starting, the South African rand will be strengthening against the US dollar. So as an investor at this point in time, okay, in South Africa, the best thing to do is to buy, okay, the dollar for the medium term. And when the C part is beginning to start selling the dollar against the South African rand. This is the end of this tutorial about Forex trader begins a complex wave count analyzing US dollar South African rand. As you can see, it was a very complex wave count. It took a bit of time to go through everything so trader may understand. We use different time frame, yearly chart, quarterly chart, monthly chart, weekly chart to see all the internal wave without violating the Elliott wave principle. We have used an inverted hammer to filter out the top, the real top of the third Elliott wave. That was very, very useful for us, and we were trying to identify the wave from different time frames. Some way were not clear on one particular time frame, but were clearer on another time frame. For instance, the ABC, the A part of the flat correction was clear on the monthly chart to us. The quarterly chart revealed to us that this is not the top of the third Elliott wave, and the weekly chart was very, very useful for us to see all the internal wave of the third Elliott wave and to see where is the third wave ending. All right. I hope you have learned something for this video also, and we put it to use to make excellent Forex and Elliott wave a trading decision. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about Forex trader begins a complex wave count analyzing the US dollar South African rand. Happy trading to you all, and speak to you soon.